Good morning, everybody, and welcome along to another episode of Beyond Bitcoin. My name is Derek Graham. I'm the CEO of Portal Asset Management, and as normal, we have Nitin Gaur here, an active member of this industry, and of course, my podcast partner for many years, and guesting with us today. Hello, Nitin. How are you doing?
Hey, Derek. Glad to be here. As we have a global perspective, this time in Asia. I took some time to stop over in India before we all head to Singapore next week for Token 2049. But looking forward to, again, this very interesting conversation we're going to have here.
Yes, terrific. Yes, Token 2049 should be fascinating next week. I'm very much looking forward to it, as are 10,000 plus others along the way. But we've got a special guest to us today, who's Charles DeHolsey, who is the CEO of the foundation of DYDX, which is the Decentralized exchange. So there's so much for us to learn here. Hello, Charles. Welcome along, and thanks for joining us at Beyond Bitcoin.
Thanks for having me. I'm very excited to be here and looking forward to the conversation.
Terrific. Look, like normal with these things, I think the listening audience needs to understand who you are and how you got to where you are, because the arrival to an extraordinary exchange and such a role as the CEO of the foundation of DYDX, a decentralized exchange amongst other things, is important. Tell us about that.
Absolutely. So I started my journey in crypto in 2011. I bought my first Bitcoin on Taobao, which is the eBay of the Chinese market. And I came into Bitcoin coming from peer-to-peer file sharing. At the time, I was a student and I was playing and hacking around file sharing via P2P networks. So think of all the generations before BitTorrent. And a friend of mine shared with me this white paper saying peer-to-peer money. And I understood very well peer-to-peer computing, but thinking we could add money on this was somehow interesting. So I started my journey with that, make some first investment. I sold everything in 2011. So welcome to my life. I've made some very early mistakes and probably less mistakes later on, but that's how I get started with Bitcoin. And then came Ethereum, and this kind of business logics on chain was very attractive to me. It was opening the kind of world of possibilities for this technology. I was an entrepreneur before, then I worked for the Hong Kong government as head of fintech. So amongst all the different verticals I was in charge of, the Hong Kong government was blockchain. So I worked very early on with the consensus of the world, the Cardano of the world, the R3 of the world, and trying to make the world of enterprise blockchain, the early days of the digital assets industry, as well as the world of DeFi and everything you can build on chain with the blockchain technology. And at the time when I was with the Hong Kong government, I was helping essentially to build this ecosystem, not only for crypto, but for other verticals as well. But crypto was my early love. So I spent a lot of time on it and eventually joined Consensus, one of the world's largest blockchain engineering companies, a company behind MetaMask. If you're using MetaMask is a product of Consensus. So I started as head of Hong Kong, then I went as head of Asia, and later on head of business development. I joined the DYDX Foundation about 2 years ago now. I wanted to, after spending a lot of time on the infrastructure level of the blockchain industry, I wanted to go up to the application side. And DYDX was ticking a lot of boxes. First, the team is very innovative. It's a squad working very quickly, innovating very quickly. So that's very energizing to work within the ecosystem of DYDX. But DYDX was also one way for me to double down into one use case, which is very established in our industry. The DeFi use case, decentralized finance, is here to stay, and there is no question about it anymore. But also exploring the world of application chain. DYDX launched about 9 months ago now his own blockchain. So when one application is large enough to build his own blockchain, it comes with a lot of potential learnings. And also working with DAOs. That was the last thing which was attractive to me within the DYDX ecosystem. The rise of the decentralized autonomous organization within the DYDX ecosystem, and how I could essentially get involved in some shape or form and have fun, experiment, and meet some of the pioneers of our industry there.
That's fantastic. Look, I'm very keen to zero down on this and get down. So DYDX, it's a decentralized exchange. Why has it advantage over a centralized exchange? And also, you're sitting on your own blockchain, as you said. I'm assuming that is to improve speed. and also to improve efficiency and possibly security there. And where is this going to take us with artificial intelligence and the challenges between DEXs and, I have to pronounce it correctly, sexes?
Absolutely. What's the advantage for a user of the DYDX protocol versus a user of a centralized exchange? It comes back to the basics of DeFi, to be honest. It's all about like the choice and the freedom. When you are in decentralized exchange infrastructure, should you be using Uniswap or DYDX or some other lending protocol, such as Aave, for example, you're totally non-custodial. So when you use Binance, for example, you send your fund to Binance, your funds belong to Binance, and then they facilitate for you some digital asset experience so you can buy and sell things. But you're not the owner anymore until you decide to withdraw. And sometimes the withdrawal from centralized exchanges works well, but some of the times they just close down and go away with your money. FTX is one example of that. When you go in decentralized exchanges, you have a little bit more responsibilities, but you keep the custody of your funds during all the experience. DYDX is a decentralized exchange protocol, and it focuses on one specific subset of the market, which is crypto derivative. A crypto derivative is not used by so many people, but it is actually the world's largest crypto market globally. So every time people buy and sell one Bitcoin or one ETH, there is 10 Bitcoin or 10 ETH being exchanged on the derivative market. And you find this pattern and this kind of order of magnitude larger size in the equity market as well. So the derivative market is very important for crypto. It's where the price discovery is happening, and this is where the market are the most efficient and the most high velocity. Usually users of DYDX and crypto derivative in general will be using perps. So they are essentially futures contract, which will never expire. In the traditional finance world, you have a futures contract with a view on the market at 30 days, 60 days, or 90 days, for example. Crypto has invented back in 2018 a new type of futures contract, which essentially never expires. So it's much more efficient way for you to express your opinion on the market. And one other advantage of going into DeFi is essentially the transparency. What people don't realize is when you trade on Binance or some other centralized exchanges, the order book is a black box. You only see the output, but how it's working inside, it's totally unknown. We take the assumption it's working properly, but you don't know exactly how the order book works. Moving to decentralized finance and order books like DYDX is totally transparent. One usage of DYDX, which has been surprising for me when I joined two years ago, was a lot of very sophisticated traders actually are improving their trading strategies by being able to essentially read the order book, as the order book is totally transparent. So if three of us are trading on the DYDX exchange, I will not know who is who, but maybe I'm going to find out that you, Derek, have a very smart way to maybe capture your profits in certain conditions. Or maybe Nitin is really good at hedging his risk, and I will be able to train my AI engines possibly, or train my algorithms to trade better. And that's something which is possible in the world of DeFi. It's not possible in the world of CeFi. On CeFi, you only see the outcome of trades and you guess what's coming out of the black box. In DeFi, it's totally open. So that's really a big game changer. And that's where maybe AI can find a way with DeFi more. And that's also where the overlap with the regulators' missions is also very strong. Regulators want healthy marketplaces. Regulators want the funds of users being protected. And that's by design part of DeFi.
Yeah, I think it's super interesting, Charles, and I think we've crossed paths in the past in this case. And I think one thing that's interesting and claim to fame for DYDX since inception, as you mentioned, is around crypto derivatives, and it formed into now the go-to place for the perpetuals. So help us understand, and one aspect of our podcast is to educate the world on where things are. So help us, can you explain how perpetual contracts differ from traditional future contracts and why they become so popular in crypto trading? And as you're describing this, also helps us understand, because they're perpetuals, which means they have no expiration date like traditional contracts, what are the funding rates and how do they work in perpetual contracts? And how do they maintain the price parity? I know it's a loaded question, but I'm sure that your explanation will really resonate with people who are in the space, who are trying to leverage this as a hedge, so to speak.
Absolutely. I will try to go into some details, but I really invite everyone to go and do their own research. We have a big education section within the DYDX ecosystem as well, for people to really deep dive and understanding this complex product. So first, crypto derivative is the world's largest crypto market. So that's very important, 10 times bigger than spot. The crypto derivative market is in the process of migrating on-chain. So most of 95% of the crypto derivative market is happening today on centralized exchanges, only 5% on-chain. But if we look at the patterns of evolution regarding the migration of spot market on-chain, if we look at Uniswap, for example, today there is about 15%, 15% of spot market, which has already migrated on-chain. So it means that there is a very interesting path of growth for crypto derivative to migrate away from centralized exchanges and to go on-chain. Crypto derivative represents daily about $2 trillion of trading. That's a massive number. So it's between centralized exchanges and decentralized exchanges. That's the size of the trading volumes of crypto derivatives. So as I said, it's a very important part of the market for the overall price discovery globally of crypto assets in general. What else can I tell you? It's more for institutionals. Yeah.
That number is so enormous. Let's just double click on that for a moment. So you're saying that futures, perpetual futures and futures derivatives in this marketplace, crypto and tokens, is sitting at $2 trillion. So is that $2 trillion US dollars of trading on a daily basis? That's enormous.
Absolutely. That's enormous, and that is split between centralized exchanges and decentralized exchanges, 95% on centralized exchanges.
And I understand that in the centralized exchanges, the largest one in the derivatives market is Deribit. Give us some concept of how much dominance they might have in centralized markets and how much is getting traded in various decentralized, including yourself, market for this $2 trillion worth of daily transactions.
So when you trade futures contracts, some of them will be within order books, some of them might be over OTCs. Deribit is a big player. The biggest player from the information I have would be still Binance, Coinbase, the centralized exchanges of the world, essentially. Okay. This is where they get the largest part of sophisticated traders. The point I wanted to make a little bit earlier is crypto derivatives are a little bit more complex than spot. They're more for some kind of educated and sophisticated audience. So the number of traders of crypto derivative is smaller, but the size of their trade is way larger than the type of traders you will find in the spot market, for example. The advantage for the perpetual futures contract versus the traditional futures contract, traditional futures contract allow you to take an opinion, either long or short, into the price of one asset, maybe at 30 days or 60 days or 90 days. They exist for a very long time. The problem is it's a little bit complex for, I would say, the mass market of users and not so sophisticated users to price the expiry of the contract the closer you get to the end of this contract. Yes. So there was at some point back in 2018 in Hong Kong, Arthur Hayes and Ben Delo, the co-founders of BitMEX, one of the early crypto derivative exchange, essentially put together a financial theory which was existing before but not applied at such scales, creating futures contracts which essentially will update themselves every hour. So virtually they don't expire anymore. So you can enter a position on the market with a crypto derivative contract, but you don't have to worry about the expiry of this contract. You don't have to worry about the pricing of this contract over a period of time for 30 days or 60 days. And crypto derivatives are very popular because they allow you to express your opinion either in a bullish way or in a bearish way. So that's very different from spot. When you buy spot, you buy or you sell. So it's very binary type of expression on the market. When you go in synthetic products, such as crypto derivative contracts, you can have an opinion that maybe Bitcoin will grow next week or next month or next hour. And you can bet on this with some leverage. So this is why also the numbers and the volume of trading in crypto derivative contract is much larger than spot, because you cannot get really leverage on spot. If you buy one Bitcoin, you're going to get one Bitcoin. In crypto derivative, you can essentially 2x, 3x, sometimes 20x your exposure. It's way riskier, but it allows you to get essentially capture more of the potential upside or downside. So it brings a little bit more sophistication in the way you can express your opinion on the market. And that's why it's so popular.
Yeah. So let me switch gears a little bit and get your perspective on something which is instrumental and I would say that is existential for the industry, which is how does, for instance, a non-custodial nature of the platform like DYDX change the dynamics of risk for traders compared to centralized exchanges in the same breath that we're talking about the perps and various other elements. Second thing is for a DEX that's growing in popularity, and you rattled off some amazing numbers, and we've seen consistent growth over the years. What do you see as the biggest challenge to the ensuring the security and transparency in the long term? Of course, it's blockchain and it meant to be transparent, but we've seen various variations of that story in the past. Please double click on this non-custodial nature and the risk associated with it. And on the long run, how do you ensure the security and transparency is preserved in the industry?
Absolutely. Maybe to cover your questions, I will try to expose why we decided to build our own blockchain. That's something we mentioned a little bit early. So DYDX
So
focuses on
one
crypto.
thing before you start, when you say your own blockchain, is this the pivot to Cosmos, or you actually
Exactly.
now have your own? Got it. Okay.
Yeah. So we built, yeah. So to get the history a little bit of DYDX, the company was founded in 2018 by a former Coinbase engineer, and the company has been focused exclusively on crypto derivative perps since inception. We did not expand to other businesses. We just want to be the specialist of crypto perps. This is all we do. You come to DYDX, you know you're going to get the best in class experience when it comes to perps. We were one of the very early users of layer twos, and we built a generation of DYDX, which was actually built on Starkware, a layer two. We were one of the largest users of layer two at some point in time, and essentially trying to leverage the best technology available at the time in order for us to keep growing the application of DYDX. On Starkware, we could settle the orders on chain, but we could not host the order book on chain. So it was essentially some kind of hybrid DeFi. And many people in decentralized finance have to do this kind of trade-off, labeling themselves as DeFi, but eventually the technology is not always available to support the velocity you will need for an order book. 2 years ago, DYDX decided to be much more opinionated on his own identity. You cannot be half DeFi. You need to choose where you sit, otherwise you're going nowhere. So after 2 years of engineering, essentially DYDX created his own blockchain built out of the Cosmos SDK, which enable us to control the full stack and the full experience for the users, having our own blockchain, so we can essentially fine-tune the parameters of the chain to make sure that it's really dedicated and offering the best performance for our use case. So instead of sitting on the top of one blockchain of someone else's blockchain, which will be a multi-purpose blockchain, a chain which is doing NFTs and smart contract and all kind of things, you move to a chain dedicated to your own use case. Building your own blockchain comes responsibility, and this is where I can touch on security, Nitin. We ensure that there is enough validators. So today the blockchain of DYDX is rich of 60 different active validators from 60 different companies. That's a lot of, I would say, decentralization of the responsibility of security to make sure that the chain is performant and not in the hand of only one person. And then there is also the total transparency. All the code of DYDX is open source. From the protocol itself to the user interface, everything is open source. So people can look at it and essentially identify if there is issues or not. The code has been hidden. And all the market behaviors, I would say, are transparent for users. So this is really how the security is designed. There is 150 plus million US dollar of collaterals on DYDX sitting on the DYDX chain today. And the community, as well as I would say the guardians of the DYDX chain, should they be users or DAOs, are always monitoring, making sure that there is enough security in the hands, security budget in the end of the validator versus the total asset value on the chain itself. And we've been really on the safe side from the early days. So this migration has been doing well. We celebrated 200 billion US dollar of trading volume on DYDX. I think it was back in July. So it's really pays off to be laser focused in our industry. And it pays off to keep working on improving your stack and being opinionated about who you are. And this is what we are trying to do, building our own chain, decentralizing the order book now. So what was one reason we migrated to our own chain was to essentially be much more in control of the full stack, to accelerate on innovation, but also being eventually able to decentralize the order book. So the order book, which was sitting on an AWS server when we were on Starkware, is now essentially sitting on the top of the DYDX chain. So it allows really to have an order book which is decentralized and making sure that it brings a very clear value versus a centralized offering from centralized exchanges.
Look, very good. We've learned a lot today. And what we've learned is $2 trillion a day turnover, 15 times that of the standard underlying is extraordinary. Yes, very sophisticated product. In fact, Radiance trades now covered calls with synthetic perps as part of its strategies. And it does require some real insight into how to be able to do such strategies on the way through. For the audience, I think it's really important, of course, that unless they're institutional investors and traders, that if they want to understand this space more, and this space is fascinating, that they should learn more from DYDX and also learn the advantages, you say, in regards to trading on a decentralized exchange, in regards to efficiency, insight into what's happening, and also the fact that you are the bearer of the assets, which is often something that is terribly important in this process. How, Charles, can our audience learn more about this, connect with you, go to the site? Please give us some insights there.
Absolutely. So if people want to know more about DYDX, they can find us on Twitter at DYDX. They can also visit the foundation website, dydx.foundation, or experience the DYDX ecosystem via dydx.trade as well.
Brilliant. Thank you so much, Charles, for joining us. It's great to have you along. Thank you, Nitin, for joining us too, and also for introducing us to Charles or suggesting that we connect with Charles.
And Charles, I'll tell you this, though. And you could talk for hours. And if you're at Token 2049, let's grab some time. But certainly, congratulations on such an impressive progress and such an innovative company that you're leading. We'll keep an eye on this for sure. So have a great day ahead, Charles.
Thank you so much, guys. See you in Singapore, and thanks for having me.
Yeah. Of course.
Cheers.
Bye for now.
Bye.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin Gaur or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.